Good evening, afternoon, morning, wherever you're joining from around the world. Thanks for joining. This is the Sunday market breakdown, 7th of July. So we're going to be going through trades taken over the last week and doing my usual run through of the market, looking at the week ahead. So we'll look at the news and we'll check the technicals as well. I am just waiting for a couple of minutes for people to join before I actually start and get into it. But let me know in the comments if you can hear me loud and clear. And also pop in there if you're new, it's your first time joining us for this call. Just pop in there where you're joining from. I don't need specific information. I'm not coming to knock on your door, but if you want to drop in there, the city or the country at least, where you're tuning in from, that'll be great. Cool. So the sound's good this time. So this is my second YouTube live. We're in the fourth one since starting these, or the third one, I think. The previous times YouTube didn't allow me to go live, but hopefully that's now fixed. Well, it is now fixed if you're hearing me and we're live. But yeah. Mihal, you're asking about the delay. I don't think there's a delay. At least this time I chose a different option. So there was like a normal delay and there's a shortened delay. I'm not sure why YouTube wants you to have a delay, but whatever. So anyway, let's move things forward. So we've got a few more people joining, which is cool. And the nice thing about these lives are that I'm not really doing anything different to what I'd usually be doing on a Sunday. So this is what I recommend to anybody that's getting into trading and wants to take it seriously. And wants to get funded, especially, is that I tell everybody they really should be doing a lot of their thinking, at least their best thinking, on the weekend whilst the market's closed. And you'll probably see on the screen behind me is basically all the major markets, stock markets on the screen. I just like to have that up just to see or gauge an understanding of what's going on in the market in terms of risk on and risk off. So, if I see a big red candle on any of those stock markets, then that's usually a good sign that market flows are beginning to get a move on, in which case I don't want to be stepping in front of any levels, knowing that they will quite easily get smashed in those type of conditions. So, yeah, right, let's pull this up. But what I was saying there is that I'm not really doing anything new to what I'd usually be doing. So the weekend for me, not the whole weekend, but the Sunday, to sit down for an hour or two, depending on how much work you have to do in terms of charting up. But if you can sit down, go over the trades you took during the week, assess them, learn something from them. Like if you're new, you're not going to be hitting home runs every time. You are going to have some losing trades on there, but the key is to journal them like I'm doing, like I'm showing you here, and learn from what you actually did so that you don't make the same mistakes over and over again, and try and apply this knowledge to the next week coming. And mark up your charts. This is where we're going to do the thinking, and then during the week you're just going to be executing on what you did whilst the market was closed. You can change things during the week, of course, but the main point of this is to stop people jumping into random trades that just, they've just seen or just created, or there's a fear of missing out. The FOMO creeps in and people think that something's about to take off, but it wasn't part of their weekend analysis, but they're jumping in. So anyway, enough waffling. That's probably enough time for people to join that want to jump on the call. So yeah, just quickly, we're going to be looking at trades taken this week. I've got the following 4 trades that I've personally taken. I want to go through why I took them, but especially this week, how I managed them, because two of them, you'll see I actually executed with a backup, meaning that my initial entry failed. So yeah, that I'm hoping should be quite interesting for some of the new guys on the call that aren't familiar with the strategy or how I approach the markets. So yeah, so why I took them, but more importantly, how I managed them this week, because this week was slightly mental. We had NFP, non-farm payroll, being the first Friday of the month. We had the start of a new month on the Monday, so that was also interesting. And we've also had, obviously, the UK elections, so that was interesting for the pound. In fact, some of the, I know some people are still in some pound trades that they got into this week, maybe not aware of that news. If they weren't, they really should be. And that's one of the things I suggest you improve on, is just, checking, especially US, UK, and any European heavy news like affecting the Swiss franc, or the euro specifically. So yeah, we're going to go through those trades. Then we'll take a look at the week ahead. We'll check over the news if there's anything upcoming to look out for this week, and then we'll go through the technicals, where I'll just run through each and every pair on my charts. So we'll start from the top, pound Aussie, and we'll go right the way through down to the metals, and we'll also look at the dollar index and maybe look at some positioning on the stock market, just to see any early signs of what the currencies might do this week. So without further ado, let's get into the trades. First one I'm going to look at is EURCAD. And drop in the comments if any of you guys saw this trade, thought about this trade, or took this trade. By the way, if you missed the trade, that's totally fine. It's not a case of everybody needs to be on the same trades. The point is you're learning to trade, and you make your own decisions about what you're comfortable with doing. So this one was, I believe it was on Monday, but it actually hit the take profit on Tuesday. I was flying at the time, and I actually updated the group. I think I was updating the group as this happened. So that was during the day when price was moving in. And then at the airport, I think is when you see that's me at just literally gone through the security gate, updating the guys on the EURCAD hitting take profit. So, sorry, comments coming in there. So, so going into this trade with EURCAD, classic move. If I just rewind it, put it on the hourly so we can see how we actually got there. So again, what am I looking for when taking trades? I'm looking for a strong move into a level, and I also want price to be overstretched. So if we put on the average true range, you can see that I've plucked this level here. This was actually refined to the 4-hour candle body close. We can see that here. So this is where I refined the level to. So the level's here, and then my entry was literally like a couple of pips just in front. That's just to stop me missing the trade due to the spread. If everything worked out and I was right about the entry, but the spread is the reason I missed, I will kick myself. So always go a couple of pips ahead just to be in the trade. And so going back to the hourly, just play this one forward. So then we were spiked in to the trade. That was Monday at 3 o'clock. And the other reason I liked this trade at that time is because quite often around 4 p.m. London time, the market tends to pull back after making its move. Monday does usually see quite a lot of momentum, meaning that markets kind of, or let's say currencies, move to where they want to be and set up for the week. So Monday for me isn't the best day for trading. That doesn't mean I can't trade it though, right? So if I see something and it meets all my rules and I just like the way it looks, I'm going to enter the trade. So I entered the trade, and we actually pulled away a little bit to start with. It looked like it was going to be, textbook trade. But what actually ended up happening is we kind of drifted overnight. So we drifted up. We took around 23 pips of drawdown, and that's something I would write down in my journal, by the way. So this trade scenario, you might think, oh no, it didn't go completely according to plan because, James, you took like 23 pips in drawdown. That's absolutely fine, because I've got a trading journal full of trades exactly like this that have, 30, 40, 50, 60 pips of drawdown that actually end up working out from the level. It's just other things affect it. And that's also why I don't typically trade with a stop loss. And I'm going to show you how I actually manage this with my stop loss so you can see how I do that. Price pulled down, moved away slightly, and then ended up hitting on the following day, literally a 24-hour trade. So 3 p.m. the next day, that tagged me out. First area of struggle. I cashed everything at that point, and I told the members in the community, literally just cashed it, the whole thing. Usually I'd cash about 80% and leave something running, but given the fact that I was about to hop on a plane, I just felt like it was best for me to just cash what was there and not have that on my mind again. Psychology first, capital second, and trading third. So protect the psychology to protect the capital, and we want to keep out of the bad trades. So that was EURCAD. Let's have a look at the stop loss. So typically I will place a stop loss somewhere on the chart, and that's just to stop me losing my shirt. What do I mean by that? Traders are often told to place like a 20 pip stop loss or something like that, right? So that's where, or let's say above the last high. So you can see if we look to the, pressed the wrong button on my keyboard and I switched to Euro Swiss. Hang on a sec. Right, let's go back. So EURCAD, the classic stop loss placement is like place it above the last high, which at that point would have been here, right? So I'm going to put it safely above the last high. But as you can see, I would have entered the trade here, and then I would have got stopped out here. So I would have taken a completely unnecessary loss when I was right about the trade. I said, there's going to be a pullback from this level, and the pullback happened, right? You can see how that would have screwed me completely. So I have a stop loss. I can't remember exactly wherever it was up here, but basically it was a long way away. I think it was over 100 pips where I put it usually. Yeah, about 130 pips away. And that gives me enough space to take other trades if we come up to another level and go harder on the next position, which I'll explain on the other trades that I took this week that didn't go completely according to plan. So, So what I did with this one is, if we replay again and take it back to where we were, when the initial take profit was cashed here, as I said, I cashed all of it, right? Because I was about to hop on a plane. But if I was on screen and I was kind of available to watch and manage the trade, and I had access to the internet, what I would have done is I would have taken my stop loss at this point. Now I'm leaving 20% of the trade on, right? So I'm 20% from this entry. Where do I put my stop loss? Because I don't want to now keep a load of risk on the table when I've already cashed 80% of the profits and it worked out exactly as I wanted, right? But I also don't want to put my stop loss at break even. This is what most traders would do. They put their stop loss to break even. I don't want to do that. I want to put my stop loss above the last high. And in this case, that's fine to do, right? Because I've already cashed 80% of my profits here, and I'm not expecting price to come all the way back and take me out. I am still expecting price to go down because I haven't seen any evidence in price action that it will change and go the other way. Equally, if price did come back and hit my stop loss up here, I'm only taking around a 20, what would it be? Let's see. I'm taking a 27 pip loss on 20% of the trade. So the trade is still profitable, right? But the reason I want to leave that risk on is because price usually comes back to test the entry again before shooting off. And in this case, that's exactly what it did as well. It came all the way back up, as you can see. So if I'd put my stop loss just in front there, it's usually like 1 or 2 pips because you want to, not have to cover the swap fees or the broker fees. So you put it slightly in front. That would have tagged me out for sure. And then price went on and went lower. Actually, it actually went back up. But anyway, that's typically what I suggest people do, because I'll find some examples where it really works out. But yeah, you don't want to be getting tagged out of trades just because you're afraid to leave a little bit of risk on the table. Pound dollar, I think I would have done the same thing on this. Price didn't, I don't think price came all the way back to entry on this one. I will just double check. It did. So, but it did before it actually hit my first area of potential struggle. But as you can see, again, a push away and then it comes back and it tests the initial entry. So you don't want to be moving your stop loss to the entry after you see it go into a little bit of profit, just because you don't want to keep some risk on the table. Because if you do that, you're going to get taken out at break even, and then you're going to have to watch the trade play out, and you're basically just not on the train. So hopefully that makes sense. And by the way, guys and girls, feel free to place any questions you have in the comments, even if they're the most basic questions. If it's difficult to follow along, please let me know. I can slow down, answer questions. Happy to do that. Yeah, it's important. I think it's more important for me to show what went on, how I manage things, and make sure that everything's understood. So anyway, back to EURCAD. That was that. It came back. It did its thing. I'd already cashed 100% of the profits down here. Let's look at, I think the next one was pound Swiss. So yeah, pound Swiss. This one's with the backup, so this should be an interesting one. Yeah, and I'll explain exactly what I mean by backup, because it's not typically discussed, and I don't know if many other traders trade this way, but essentially, because we use a level-based system, price comes into a strong level, we're expecting a pullback. The idea is that traders have pushed price enough in one direction that the only way that they can now take profits is to either buy or sell out of that position. If they're buying into a position and going long, they have to sell what they've bought, the currency that they've bought, in order to get out of it and cash their profits, right? So that's what creates the pullback. Now, we're waiting for the absolute most probable area where price is going to pull back. So you think of that level, and then you wait even longer for the next level, and then you take that one. And I'll explain what I mean right now. So we hop into it here. Pound Swiss. Right. Not my favorite pair to trade, to be honest. But just in short, we have a level just over here, right? So I'll point that out. Right here. That's the level we're talking about. Okay. So on Tuesday, I believe, price came up to this level. It came up quite strong. This one strong bar straight into it. I'm like, okay, that's nice. I'm going to take this level and we'll see where it leads. So what happened was price drifted up, came back, and then it actually gapped in the night, I believe. So let me just get rid of that. Go down to the 1 hour. You can see that the trade hit around 2 p.m. Came up a bit further. So we had around, from the level, 9 pips of drawdown, which is nothing. And then we went around 9 pips into profit, 18 pips total move, before then continuing to drift back in the opposite direction. Then we've got this gap area. So you can see where price closed here on the Tuesday at 9 on this chart. So that's at 10. And it gapped down to all the way down to here, where it opened up and then close the gap, which is usually what happens. And it also, and I'll show you that on the pound dollar trade as well, why I took that was due to a gap. So price continued to drift away. So then you're thinking, all right, okay, so price is drifting on up. What am I going to do? Because my trade's going into drawdown. How am I going to manage this? So next level up was this one up here for me. Not a strong level, But at the same time, I was looking at the positioning of the pound across all pairs. We had CAD Swiss that came up, hit the level pretty much around the same time, and then pulled back perfectly. This is exactly what I was expecting pound Swiss to do, right? But it only happened on CAD Swiss. Why? Mainly due to volatility with the pound, I believe. We had the elections this week, and also pound usually responds quite well to whether or not the dollar is strong. And we had this sell-off on the dollar pretty much from Wednesday onwards. Well, the whole week, actually. From Monday, we were just moved down. So last week was a bit of a sell-off on the dollar, so pound gained some strength through that. So, where was I? Pound Swiss. So going back to pound Swiss, we drifted away. That level was there. I was expecting a bit more. I was expecting the dollar to turn around and gain some strength. So I entered at the next level. Not on this one, by the way. I waited because when price came up here, I didn't really have any other confluences from other pairs telling me that the pound was likely to pull back or that the Swiss franc was going to gain some strength. So that's why you've got to consider the whole market when you're looking at entering a position. Now, the next day when price actually spiked up and tested the level again, this is typical before moving off to the downside. So you come up, you hit a level, price moves away. It usually breaches the level slightly, but when price moves away, it usually comes back, just kisses the level once again before moving off. And that's exactly what we had on pound Swiss. So I told myself that day, if pound Swiss comes back up to that level, it's going to be a kiss off. And the reason I thought that was because this is right before NFP. And this orange arrow on here was basically my prediction before NFP played out. So I did this across all the pairs, and I'll show you what I mean. So pound Aussie, this is my prediction on that. Pretty much played out exactly as I thought. I thought we would come up to around to this level, and then sell off, meaning that I expected the dollar to initially weaken and then ultimately strengthen and head back to the highs of where it was. So we haven't had that yet on the Dixie. You can see that here. We just kind of weakened. But regardless, the technicals kind of played out. So pound Aussie, if I'd entered the short up here, it would now be running at around 40 pips. So, but it's not a strong level for me to take here, which is the reason why it wasn't taken. These are all just confluences. Pound New Zealand, this one did exactly what I thought, like to the T. So here's the level. Price came up. If I was going to enter here, it would have been a couple of pips ahead. And this is exactly what I mean about missing trades due to the spread. So that is 3 pips. So on these more, not exotic pairs, but you've got pound and New Zealand, it's not necessarily a major Forex pair. So you can go 3 or 4 pips on those ones. But yeah, that price did exactly as I thought with that one as well. So it's another confluence that the pound is ready to sell off, right? Pound yen, this was my prediction. So price was here before NFP, or around here. Price came up to exactly where the level is there on the orange arrow, and then started to pull away. Not a massive reaction yet, but we'll see. Pound CAD didn't. It's just smashed through everything right now. So this one hasn't played out as I thought. But again, these aren't trades. These are just me looking for confluences to work out what's going on with pound Swiss. So when I saw all that, and I saw pound Swiss flick up here and sell off, just like it did on pound New Zealand, that's why I entered the trade up here. And you see that that's a second entry. So what I typically do, this is how the backup works. When I'm entering a trade here, I am expecting it to work, but I'm bored by it. I'm not excited about it playing out, meaning that the amount of risk I put on the table and the amount of, let's say the amount of money, if we're going to talk about actually trading, the amount of money that I'm willing to risk on this trade is not significant. And therefore, I'm able to stay in the game longer, even if price goes against me. Even if price went 100 pips against me, I'm still comfortable because I've seen it time and time again where I have been wrong on trades, and then the backup level works better because it's already smashed through the first level, making the second one even more probable. There's still a chance, of course, that the second level might not work, but I'm willing to risk that and be wrong when that happens. And if you've seen any of my videos before, you'll know that quite comfortably can say that I have a hit rate of over 90%. And that's like, I'll take a trade like this and I'll combine these two entries as one trade, right? I'm not going to say this, I was wrong on this one and factor that into my trades. This is seen as one piece, like a one investment. So this to me is just trade management, the second entry. So how I'm managing the drawdown is I'm re-entering higher up where I think we're going to get a strong reaction, and I'm entering with twice the lot size. Meaning if you went, let's keep it easy, if you went on with one lot on a, let's say it doesn't matter the account size, but if you went one lot short here and price moved against you, you would go 2 lots short up here. And why you do that is because I don't need price to come all the way back to my first entry for me to cash the profits. All I need is it to go halfway, and then I can close this trade at a halfway loss, and then this trade halfway still puts me in profit. Does that make sense? So that's how that trade was managed. So I still came out on a profit, and it was one that I wanted to, this isn't one that I will hold and just like let it continue. I just wanted to be out of it at this point. But that's me. That's my psychology. There might be other traders that are happy to stay in this for whatever reason. Just how I approach it is I want to protect my psychology. So because I want to protect that, I just want to be out of the trade and finish the day. We're day trading here. We're not doing long-term investments. So even though I'm not sitting here trading the 1 minute, 5 minute chart, which I think would be ridiculous. What I'm doing here is I'm essentially going, I want to be in and out of this as quickly as possible, but I don't want to be reacting super, super fast to everything that's going on around me. I want to have time to think, but once I've done my thinking, I execute, and then I don't go back on that. And that's really important. All right. So that's the pound Swift. We've got a comment here. Yep, cool. Makes sense. How much account size do you go in the first trade? Is it like 50%? No, it's definitely not 50%. So on my personal accounts, and by that I mean my own funds that I am risking, like not prop firms, so not other people's money that I'll be trading. With that, I go in super low. Like it's not for me to go in. It would be like 0.25% would be fine for me. But again, it's all relative, and this is why I say to people that if you're wanting to trade and you're wanting to trade an account that's, $500, $1,000, and just double it, this isn't how professional traders operate, which is why my approach is to get people funded, is to help people learn to trade. And I think the way that I do it, like other traders make more money than me, sure, like 100%. There are better traders than me. But where I feel that I have quite a lot of value to add is that I know how difficult the psychology side of trading is. And so if you approach trading with the type of typical thing that you'll see on YouTube or people selling courses on, is that people will tell you that you need a positive risk-reward ratio, meaning that let's say you risk 1% of your account, but you're holding for a 1 to 3, meaning you've risked 1%, but you want price to go 3 times that. So typically it looks like this. And I apologize to anyone that this is absolute basic stuff for, but I just want to make sure my point is made clear. So basically like this. So the entry would be here, and you're risking in this trade 28 pips, But that's your risk and that's your potential reward, right? But in this scenario, you can see if I'd done that on my first trade, I'd already have lost that trade, right? Whereas how I approached it, I still came out in profit. If I'd taken this from up here, of course it looks a lot better because, you know, price came in. To actually move it over there. You can see price moved in here, but we've only gone 1-to-1 so far. So I've still got all the risk on the table right now. We haven't hit the take profit. And this take profit, why is it 1-to-3? Who decided that, right? You need, like I teach the way that you need to define where you want to take your profits based on where price is likely to struggle. Just you saying that I want 3 times my return isn't going to help you get that profit target hit. The market's going to do whatever it wants. So anyway, that's why I approach it like this, and why I think the funded route is much, much more sensible for traders who want to do this long term and actually make a full-time income from it. You can buy a funded account for $500 and get access to 6 figures of capital. That never existed before. It's amazing. So why not do it properly? Anyway, that's pound Swiss. I'm going to move on swiftly here to pound dollar. This was also the backup. This one was slightly better. So pound dollar. Yeah, this one's just flown up, but I'll show you what happened with this one too. This one gapped, and I want to show you an interesting thing about gapping. Gapping is when you see, literally, a gap created. So on the, I forget which day it was now, this one was Wednesday, yeah. So around Wednesday, 2 p.m., pound dollar just all of a sudden got to this 1.274 level and then just jumped up to 1.276. So the gap created was around 20 pips. It just jumped. How the hell did that happen? Well, I won't go into why that happened exactly, but it's usually when price moves super fast, and depending on which broker you're using, it can form this gap. So as price came in, we came up to this level, which I thought was a nice pullback level to go down deeper again. So I was expecting price to react off of this, and we can come down here. But we didn't. What happened was, like pound Swiss, I'm in another pound trade, and the pound is continuing to rally up. So what am I going to do? Well, what I decided to do with this one is re-enter. But this time I didn't re-enter just because a level got hit. You see, there's nothing here. If we look left, there's no level here for me to take, right? I'd have to wait till up here, and you could argue that that's not a very clear level. That's like, it's a bit wanky. Like, we don't really know what's going to happen when we get there, because that whole section of price action was just a bit of a mess. So why did I enter here, and why did I choose to enter there? Well, I'll show you. The pound was pushing on up because we were having this dollar weakness, right? So if I jump back to the Dixie, I believe it was here. Let's see. Yeah. So if you remember on my pound dollar, it was Wednesday at 2 p.m. This is Wednesday at 3 p.m. So what I did is I came along and I said, right, the Dixie just seems to be, the Dixie being the dollar index, it just seems to keep on wanting to go down. And we had this strong bar down. We were just moving solidly down. I said, okay, this has to stop at some point. Where is it likely to stop? Let's put ATR on the chart. So ATR being the average true range that price is likely to move in a given day. And when we're past this, it increases the chance of a pullback because price is overreached and traders, algorithms, banks, whoever you think they are, want to take their profits. So once we hit a level, which for me was there, that's the intraday level, because you see that's the low, candle body close, strong move off it, and we moved up, right? So I decided that, well, if we breach average true range, the Dixie is likely to pull back from there, and that might be enough for my pound dollar trade to work out, but I'm going to have the confidence to take it higher up. And this is when you're no longer trading off the technicals on the chart of the pair that you're trading. It's usually due to what's driving the market, and in this case the dollar was. So when your technical analysis fails, you have to go and search around the rest of the market to find out what's happening. And that's kind of like what I was saying about the screen behind me there. Like, that's all of the, like, across the top we've got the US 500, the US 30, the NASDAQ. Across the middle is the FTSE, the German 30, the Aussie 200, and across the bottom is metals. So we've got and the Japanese stock market in the bottom right. So that's just to identify if there's something else happening in the market that's driving stuff. And the reason I look at stocks is because, well, when stocks are being sold or being bought, you're exchanging currency for stocks, right? And it helps clarify the risk sentiment, whether traders, well, not traders, but investors are more risk on or risk off, meaning do they want higher risk investments or are they looking for safe havens? So higher risk investments would be like businesses, stock market, right? So risk on. But if we get fear in the market, investors go risk off and they go to things like gold. Even the Swiss franc is seen as a safe haven, or the Japanese yen often. So that's kind of what we're looking for there. So once identifying that the pound is what was really driving, not the pound, sorry, the dollar weakness driving things, that's why I decided when that level hit on the Dixie, as soon as that level hit, that's when I took that trade. So I re-entered, and what happened here was we pulled back, and we pulled all the way back almost to the initial entry. We came within like pips of it here, but I'd already taken my full profits from the double position up here once we'd hit here. And why did I define this area? This area was defined because if we go to the 1 hour, there are two things going on here. You remember I told you about the gap? The gap needs to be filled pretty much always. If you go back across this is IC trading, IC markets. If you go back and look at the history of almost any, not on every pair, but on most cases, the gaps need to be filled. So when we gapped up like this, I had even more confidence that we would need to come back and fill the gap. And that was enough to get me 30 pips. So I took this one at a 13 pip loss at only, let's say for easy maths, with one lot. And then I took two lots from the top for a 30 pip win, right? And so that to me is one trade. And that is how you effectively manage a trade that goes wrong. It ends up making you more money if it comes right back to break even. But in this case, being the NFP week and the fact that we had the UK elections, it was just one of those where I just wanted to be out. So that was how pound dollar was managed. That makes sense? How are we doing for time? We're 38 minutes in. So got to close up these other trades. Hope this is valuable for you guys watching. Like I said, it's just how I trade. I believe it's the safest way to trade and the way that will actually keep you in the game long enough to make it as a trader. That's I think so many more people would manage to get through to the other side and become profitable if they just were able to stick it out longer, which is partly the reason for the community that you guys are a part of. And if you're just randomly finding this video by coming across my YouTube, got a free community. If you go to jamesdownton.com/free, I'll put the link in the description below. You can sign up free there, do a free course on how I do all of this stuff. It will always be free and there's no charge whatsoever. So if you're interested, go ahead and join that. Going to be dropping a lot more content in there to help traders get funded. And that's it. So anyway, last trade, dollar CAD long. So I believe some other guys took this in the community. It was a nice trade. not a textbook trade, to be honest, but and the reason it wasn't was because price wasn't really overstretched. You see, we've got average true range here, but price didn't really get past that. It's been within the true range the whole time, but what we did have was a fairly strong level. So if I zoom out here to the daily, and it's the daily and the weekly that we find our levels. We don't look below that. We refine the levels on the 4 hour and the 1 hour, mostly the 4 hour. But as you can see, when price was last at this level, we had a really strong move up. We did like 100 pips or so from that, from the move anyway, around 90 pips. And then we ended up pushing even higher. It's around a 200 pip move, which is why I was interested in that level. We had come close to it before, but we just missed it. So we came close on Wednesday at 3 o'clock. We were within 7 pips of my entry, and we did move away, but we hovered here. We didn't move away in a big way, so that told me that price still wanted to do what it wanted to do, which was come in, tap this level, and you'd see a reaction. So I placed my area of potential struggle, meaning looking to cash my 80% of my trade when we hit this green line. And why did I choose there? Well, that's just, if I drill down on this, I looked to the left and I saw that we basically had this level here. If I draw my arrow just here. So that's where I was like, okay, that's a pretty safe place to take profits. And I think grabbed 30 pips on that. So again, cheeky one on Thursday. And then on Friday, I didn't have any trades. I was traveling again. So I had a day of travel. And it was already pretty eventful week. Like 4 trades for me in a week is quite a lot. Usually it's between 1 and 3. So I consider that a fairly busy week. And I'd had, I don't want to say stress with these because, again, like it's just done over and over again. When price goes against you, you already have the backup in play. So once you're doing your analysis, like today, when we go through it, I'm going to be selecting backup areas, and I'm not going to take trades unless I've got a backup plan. If I've got a backup plan, I'm good to take the trade. But if there's no backup, then I'm much less likely to take it. So let's look at this dollar CAD trade. My backup level on this, if we zoom out, is here, because we had a huge reaction off that one, right? So what we're essentially saying is, if price comes here and has no reaction at all and just drifts past it, then it's had no pullback since it's made this huge move down. We had like a small pullback here, which was 15 pips, right? Nothing. We had a small pullback here, 20 pips, nothing again, nothing significant anyway. So either this level is going to work because we've had a big move off of it here, or price is just going to continue on down and this level becomes even more probable. But why? Because traders are in this trade, whether it's traders, algorithms, whatever, I don't care. Like money is being moved to here. So if this level didn't work and I didn't cash all my profits here, I would have taken my backup level here, which is only 50 pips away. So I would have let this come into drawdown. I would have taken the 50 pip hit, and I would have let price come up at least halfway. Depending on how price got there, it might, because right now looking at this, I don't know where I would take my profits because I don't really have a gauge. I would say at this stage, I would probably take my profits somewhere around here or here, looking at these lows. That's where price for me would start to struggle. So if we measured that, that's 25 pips only. So we're probably more likely to get at least 30. So I'd probably get my first area of struggle just there. So this trade would end up looking something like this. Take the line. I use a trend line to draw these. And then I've got a template that just saves it as entry 2. Second entry. And I would just have moved this guy to that level there, see? And that's basically how I've been managing that trade. So if this level breached, we would take a 16 pip loss on the initial entry, but we take a 30 pip win on the second one. And remember, the second entry is going to be twice what the first entry was, all considering risk management. Remember, I am very comfortable having my stop loss down here because I'm not over risking. And the reason, and the way you get to that stage is by not trading a piddly little account thinking that you're going to buy a Lambo next month with what you've got. What you need to do, if you're serious about this stuff, is learn to trade properly and then get funded. Once you're funded, you can trade properly, which means you'll be doing this for years to come, which means, congratulations, you've just found a way to be financially free, live anywhere in the world, and do anything on your terms and make whatever money you want to make. But it comes from having patience in the beginning. So that's my mini rant on people that flip accounts. It's great when it works, fantastic, but I got bills to pay and I'm not going to gamble it on flipping accounts. So this is the way I believe everybody should trade. Not exactly like I do, but people should trade professionally, as in get funded, and go down that route. So anyway, that's my 4 trades covered. Do we have any questions? I want to have some water because, geez, it's dry. Any questions? I feel like my voice went a bit monotone there for a while as well. I am excited about this stuff. I love talking about trading. I think it's one of the most difficult things to do, but once you actually figure out how to do it, it's actually quite easy. And it will keep you sharp always, because you're only as good as your last trades, and your mindset and your psychology still needs protecting each week. So you've got to become a master at doing that. Anybody, any questions? If no, I shall move on and start breaking down what I'm looking at during the week. This usually doesn't take long, this bit, because the great thing, just remember to flick back to my charts. Broker. The broker I use is IC Trading. So if you're in the group, if you're in the, where is it? Let me just share my screen with you. It's much more fun to talk about trading rather than trade. Yeah, well, if you want to say that, I do agree with you to some extent. Let's do this. So, getting fancy. Much more fun to talk about trading rather than trade. Trading is like personal development on steroids. It will school you faster than anything else. It will humble you quicker than anything else. And yeah, the lessons that come from trading are just so applicable to every other area of life, which is why I love it. I can get very deep and philosophical about trading. Close friends and family know, and are probably extremely bored of hearing me talk about it, but that's it. Going back to the broker question, I don't typically recommend any brokers, but your question is exactly what I do. Is I just tell people which one I use, and I use IC Trading. So if you're in the group, how do I get back? It's actually one of the links in the group. So on the sidebar, we've got the Trading View, Trusted Broker. That's literally the one I use. And then the other stuff for getting funded once people are ready there. But highly recommend these guys. I've used them for I think basically since the beginning. So yeah, never had any issues. IC Trading rebrand of IC Markets, or it's for a different region. It's just with IC Markets, they're basically the same. It's like a sister company. So the main difference being that what I like people to do in the beginning is trade with real money. Not huge amounts, obviously, because you're just starting out. But what I would prefer is that you have the full emotion of what it's like to trade actual money, because otherwise all that will happen is once you actually get funded is you'll have all the emotions for the first time, and it will just throw you off. So I do recommend using your own money first. Not a huge amount. Ideally, $1,000, just so you've got enough to play with. But you can use less. And the reason for IC trading over IC markets is the leverage. So with IC trading, you can actually use higher leverage. I believe they give up to 1 to 500, but definitely they have 1 to 100, which basically just what it allows you to do is still do the cashing of the, what am I trying to say here? Splitting the trades. So when I say I've cashed 80% of my profits, that's really hard to do when your leverage is only 1 to 30 and your account size is only 1,000. There are people in the community that have that, and it's not a problem, but you can't really play with it like that. Once you're funded, and when you have your own money from the profits that you've had from the funded accounts, I strongly suggest you take those profits and put them in your live personal account, because you never know how long the funded accounts are going to be available to us. Right now, it's a huge opportunity, and I think we should be using it. But yeah, that's the main reason. Yep. So anyway, enough talk about brokers, and you're free to use whatever broker you want. Like, I have no qualms about that. It's just I can only tell you what I use, and that's it. So yeah, more recently IC trading, they've been good to me. Spreads are good, and I mean, it's all comparable. Like, a lot of brokers are good. What you don't want to do is just go with a bad one, and if you're only putting in like €1,000, $1,000 or whatever to start off with, it's not going to be a huge deal. It's just like when you've got a few 100,000 with one broker, you want to make sure that you're not with some dodgy outfit. That's all I'll say on the subject. Anyway, getting back to the markets. Let's move that off. How do I get rid of that? Still learning the YouTube live stuff. Remove. There we go. So let's run through. It should be fairly short, because what happens when you're doing this every week is you're not just starting from the beginning, right? So I've already got all my levels on the chart. So right now, GA, Pound Aussie, has moved off of this level by almost 100 pips, which is quite nice. So I would still very much entertain this level getting hit, because we just missed it down here, right? So if this level was to get hit, I would probably take that up to the next level like this. So there's a good 30 to 50 pips in that. Slight issue with it is, and why I quite like it, is because, and by the way, this is going to be totally subjective. If price just like slams into it, I would expect some reaction. We don't know what average true range is going to be just yet. Right now it's here, but I think, and it's just a guess, that when we open tonight at 10 or 11 p.m., depending on your time zone, I'm thinking average true range, because we've moved up, will be closer to this level here. So it might be bang on the level, which would make it more interesting for me to take. But if that level gets breached, what's the backup plan, James? Well, not much of one, because what have we got? Like, that's the level. And once we slip that, I mean, we're just in free fall. There's nothing in here for me to go on at all. So unless there's something driving the market that tells me the pound is going to stop at a certain point, I've got nothing technically to go on this chart. So that's the level. I'll just put a little buy box there, just to remind myself that I am still looking at taking a buy there. GN. Kind of already worked from the level I had. Next one will be down here for me, or if we pushed up, I would like to take a trade from up here. That's it. GU. What's going to happen with the pound dollar now? So because this one's a dollar pair, I like to look at the Dixie positioning. And this will apply to all the dollar pairs that we'll now go over. So we look at the Dixie. And I don't want to pay too much attention to this channel. It's distracting. And I got far too many lines on my chart now. But it's been quite important this week. That level there would now be that. So where's the Dixie going? I still think up. So at some point, dollar strength. And not to jump around too much, but let's have a quick look at the calendar for this week. So we've got the legislative election, which affects the euro. That was already today at 1 a.m., I believe. Yeah. All day. So maybe there'll be some volatility on euro pairs when we open the market. Again, we don't try and predict what the news means. Nobody knows. Anybody that says they do is talking shite. Dollar Fed's chair. We got Powell testifying. Should be interesting. So that's on Tuesday. So that's coming up pretty fast. So if Powell's testifying, we look at the chart, and this is just purely speculation, but how I approach it, I think is it might be interesting. So the charts will often tell you what's gonna happen. So if he testifies, whatever's going to be said is likely to see dollar strength. I think. I'm just taking my best guess, but I got no idea, and we don't try and guess. We don't take trades based off of like what we think is going to happen in the news. We let the news turbocharge the charts, meaning that when the news comes out, price moves very quickly in one direction, and when price moves very quickly in one direction, what happens next? There's a pullback. That's when we get in, because we don't need to predict anything at that point. We don't need to be right about the news. We just trade the charts and what we see. That's it. So yeah, there's that. Wednesday, some Chinese CPI, Chinese yen, New Zealand dollar interest rate decision on Wednesday. That could be interesting. So we'll come back. We'll have that in mind for when we look at New Zealand dollar and the other pairs. New Zealand CAD, New Zealand Swiss might be interesting. Thursday, CPI on the euro, and we've got dollar CPI also. So that'll be nice and eventful. Friday, euro retail sales. And some more US dollar news around the New York Open. So, should be quite a nice week for trading. Like, things should be moving, especially after NFP. We didn't have such a huge move off of any of that this week. So, that should be interesting. Pound dollar. Look into the charts. If I clean up all my drawings, I'd say pound dollar wants to drop. We didn't make new highs last week. We've had a strong move up. I think we're just due a pullback. I think something like this is going to occur, and we're just sweeping this now to come lower, meaning that wouldn't be surprised if we saw a drop from here. But anyway, it's speculation. I don't want to tease you into any stupid trades. Remember, we just trade what we see. So after price has moved, not try and predict what it's going to do. Pound yen, I'm not touching any of the yen pairs at the moment. I think they're just wildly doing whatever they want. The only real confluence I have for them is the Nikkei. And if we look at the positioning right now, we're at this level, which is quite cool actually. So expect yen pairs to pull back from here. So what I mean by that is we're looking at the Japanese stock market. So when stocks are sold in Japan, the people receive yen, which strengthens the currency. When the stock market is pushing up, they're obviously spending the yen, so they're trading it, like getting rid of it, to receive stocks and more risk on. But we're at this level now, and we haven't been here for quite some time, since March. So this could be a nice selling opportunity for all yen pairs. But just to go off the fact that the yen, that the Nikkei, Japanese stock market, is on a level, isn't really enough. That obviously happened on Friday. I wasn't on screen for that, but I saw us coming up to it. We were sort of at this level here. But yeah, probably, I'm just going to draw an arrow on here because I like to be right, but probably some pullback from here. But again, we trade what we see, not try and predict. Pound CAD. Again, I'm kind of expecting a pullback from here, just based on dollar positioning and the fact that we've had this strong move up. Just we've surpassed the level. We haven't really reacted here. We closed strong up. Wouldn't even be surprised with all the UK election stuff if we gapped up higher to this level again and then shot back down, like kind of what am I trying to do? So we do this kind of shape. You know, wouldn't be surprised if we saw something like that. But again, we're waiting to see what happens. If we were to get up there, is it a sell? I mean, depending on how we get there, but yes, for sure. Average true range is way down here. So, and we're way over it. So a pullback has to really occur from here. It's just you can't get into it now because of the spreads and because of the market opening. Like either you were in from this level or you weren't. So that's just one to watch to see what happens. Pound Swiss for me is done for a while now. I'm not really interested in touching it or any Swiss pair for a while. I'm not a big fan. CAD Swiss, like I said, we had this really nice move into the level and pull away. So this is just a great example of levels trading working exactly as it should. CAD Yen, I could say on CAD Swiss, like when will it become interesting to me again? Well, probably down here. And look how I mark up this level. I'm not going for like the tip right here. No. What I'm doing is I'm taking the candle body close, which for me is from where it moved off. So it's anything like that for me, the candle body close right here, which means price can draw down by at least 12 pips within the zone. Happy for it to do that. That's not an issue. And then I'll go to the 4 hour and I'll see if I can refine it any further. And as you can see, I was quite accurate on the daily, but I can refine this. So the move came off of this candle body close here. See that? And I want the latest price action. So what happened here? I don't care. This is how I'm refining my entry to get a better entry. That makes sense? Hopefully that makes sense. Makes sense to me anyway. Moving on. So we've still got to get these through, and I'm fully aware that we've gone over the hour by a few minutes. CAD Yen, as I said, Nikkei positioning. This is quite likely to pull back and also continue pulling back. How far it pulls back, we don't know, but I don't know. That was a level for me going up. That was a level for me going up. And my level going up is different to my level going down. Why? Because I want to use the same level that was used for a sell previously. Again, I don't want to use a level that was used as the buy. That's why I don't like the term support and resistance, because it's not the same thing. If price is moving up, I'm looking for shorts. And I only want to take levels that have been shorted from previously, not just used as support or resistance, if that makes sense. Euro Aussie, looking for the buy down here around the 159 round number. I think that could be really nice. I mean, look at that. Such a strong move off it. So what are we going to do for this? We're just going to wait. The longer we wait, the more the probability will play out. So we're just going to wait for that. Again, like we're looking for like 1 to 3 trades this week. That's it. That's all we want. Euro New Zealand. Just waiting. If we push higher, Could take that. Depends where the average true range lies. We see the average true range was right on here. I think if we open tonight, who knows? Looks like we're still going down anyway. That's what we're expecting for Euro Aussie, right? So these ones typically move together. Not always, but quite typically. So some more weakness here. We've got the New Zealand interest rate decision this week. So if that comes out as good for the currency, we'll definitely see this drop. If it drops all the way down to here, I don't know, but whatever. EURCAD continuing up for the time being. Levels of interest. Well, we've got this gap here, so it's a bit messy. Also, this is a bit messy, but if we were to get up to this level, could take a trade. If we got up to this level, I'd definitely take a trade. So, yeah. And I think these are refined to the 4 hour. Let's just check. No, 1 hour probably. So I'm going to refine that to here. And then I'm just going to go ahead and get rid of that level. This doesn't need to be used anymore. Yeah, I'm looking for levels for the sell, not for the buy. So, yeah. And then what I do is once you pop the level on there, just set an alert. That's it. Then just have trading view on your phone. And when it gets close, trading view will just give you a little notification saying EURCAD's almost ready for bacon. And that's it. You don't have to stay on the charts all day, staring at your screen. That's the most unproductive thing you could do with your time. Euro Swiss. Well, we're pulling back here. For a sell, I think I had this level marked up. If we go to the 4 hour. Yeah, you see that? So price moved in here. We also gapped on Euro Swiss, just like we did on the pound dollar. So we gapped up there. That level was breached. This area is a bit messy. Will we pull back further? I mean, maybe. Pound Swiss kind of looks like it wants to as well, but I think we're just going to end up... Yeah, I can see that pulling back a bit further. But again, I'm not trying to trade or predict what's going to happen. I do not care about these things. For me, the only thing I'm going to entertain on Euro Swiss right now is a sell from up here. So I'm going to go ahead and put a level up there, an alert, sorry. And it's like, I might as well just write like Euro Swiss is ready for you to get paid now. You know, and before, if it doesn't get there, I'm not interested in taking anything. Euro pound, I just don't trade this at all. You can see I've got nothing marked up on here because, I mean, it's just horrible. Look at that. Looks like a heart rate monitor. There's not enough in a daily move for me. Like if you take the random one here, like it's 28 pips it's moved in a day. Like that doesn't provide enough for a pullback. Euro dollar, this came up nicely on Friday. Obviously I didn't see that because I wasn't on screen and I didn't have an alert set here, but looks pretty nice for a sell. Euro yen, and by the way, on euro dollar, that doesn't mean I'm taking a sell there, just disclosure. On Friday it would have been more interesting to me, but it didn't get there. Aussie dollar, again, if we get the dollar strength, could be nice, but I'm not really interested in anything until we get up here. Aussie dollar sell. Aussie Swiss, kind of same really, unless we get up there. Not really interested. I've got an alert set. I think that's still set. Aussie CAD. Yeah, we kind of got this whole like section here. It's a bit messy. There's not really any clear levels in there. So not really one for me. Impulsive move up, bit of a correction. Looks like we could be moving up again. But until we get up there, it's not for me. Aussie CAD. Aussie New Zealand. This looks pretty good for a sell. I was looking at this this week just gone. Big push down, big push back up. It's got to be a reaction off that level, right? Something. Maybe 30 or 50 pips. Aussie yen. Again, maybe a yen pullback due to the Nikkei positioning, but that's it. New Zealand dollar. We've got the interest rate decision pending this week. So if we were to get up to these highs, that would be cool for a sell. Just depends how we get there. If it's a strong move in and price is breaching average true range, take it all day long. Obviously, make sure you've got a backup level too. That adds extra protection, and make sure there's enough room for your trade to actually enough opportunity. So if there's only like, if you think price is going to struggle at 10, 15 pips, do you really want to be taking it? Probably not. New Zealand CAD, also nice. Moved off that level just like dollar CAD. We had the trade on Thursday last week. So if that continues up, that's a nice level to take. Next one for me, probably be down here somewhere. I'll have to refine that. Remember, most recent price action. I don't really like that because price gapped here. I'm going to go with that. Not the nicest level, to be honest. Am I going to want to trade that? Probably not. Everything else would have to align. I'd want other confluences like New Zealand dollar on a level. I'd want to see, a lot more reason to get into that one. New Zealand yen, again, I think yen pairs are due a pullback. They are like overbought, but they can just have a complete mind of their own and go on forever and ever. The only reason I'm interested in that pullback is just the Japanese stock market positioning right now. It looks prime to pull back on the level, but just avoiding them for now. Dollar yen, same kind of thing. Although expecting dollar strength again this week, so it might not be the best one to get involved in because obviously that's going to push the dollar up. Just have to see how we open tomorrow after the London market open. Dollar CAD, got the runner on that now. We'll see if it continues up. If not, whatever. That was my backup level. Dollar Swiss, pushing down. It's a Swiss pair, not really that interested. If we got up here or up here, maybe it's worth getting involved. Maybe, though. To be honest, there's going to be better trades than taking a Swiss pair. Swiss yen, mind of its own. It's just been going sideways up. Looks like a sort of a bear flag forming. I would say down. See how it opens. Gold doing its thing. Looks like that wants to push higher. Impulsive correction, impulsive. Something like we've pushed up, we've gone. Wouldn't be surprised if we saw something like that exploding. But again, I'm not predicting anything. Dixie is where it is. Maybe it will fall lower. Maybe not. I did think and was expecting it to push a bit higher because we got up here, but we didn't close the gap. So we've left this gap open. So I just feel like price wants to get there before pulling back, but doesn't mean it will. It can completely just carry on doing its own thing. Stocks, have a quick look. I mean, jeez. Why? Let's turn that off. So stock markets are still pushing up. No real pullback for a long time on these. US 30. Got a bit of a draw in going on here. yeah, I was thinking we push up here and pull back. But again, I'm only really looking at these to try and predict what might happen with the dollar. And it's really just gauging risk on and risk off sentiment. So at the moment, we look fairly risk on. But if we end up going risk off, then that could make this kind of thing play out on gold, the push up, the correction, or the consolidation, and then a push up again. That's kind of if stocks were to drop now, but there's no telling what they'll do. They could just carry on forever going up. UK FTSE, German, and obviously the Japanese stock market is on this level, like I said. So it could well be that all yen pairs are ready to pull back now. Wouldn't be surprised if they did. Let's have a quick squiz at Bitcoin. Yeah, so classic kind of anyway, Bitcoin's doing what Bitcoin's doing, but there's the Bitcoin fan club that are through and through want it to go up. I don't trade it. But yeah, that's it. So that is essentially the every pair. I don't think we've missed anything. What I'm looking at this week. So yeah, I'll wrap it up here because we are at 1 hour 16. So for those of you that's still on the call, thank you very much for joining and for continuing to the end. If you can't sit through a 1 hour Sunday market analysis, then you don't have much chance of putting your patience skills to the trading profession. So well done for doing that. And we try and make this a weekly practice so that every week you're not starting Monday thinking, shit, what's going on? You know exactly where everything is. You've analyzed your trades from the previous week. You've made note of any lessons that you learned from the previous week. And you've told yourself you're not going to make the same silly mistakes you did last week. Clean slate, fresh psychology. Monday market's open and we go get it. Anybody have any questions? If not, I'm going to wrap things up here. But thank you very much again for joining. And hope to see you on the next one next week. So, cool. All right, guys. Enjoy the rest of your Sunday. And, trade safe.